You're welcome back. This is Newsfile. It's your most authoritative news analysis platform. And here on Newsfile, as always, we put Ghana first. My guest seated here in the studio is John Abdullahi Jinapo, MP, Yape Kusogu, and Member Finance, Mines, and Energy Committees of Parliament. In this building, right around, and in my sight is Alexander Kwamina Afenyomaking, who's MP Efutu and Deputy Majority Leader. Joining us by Zoom, Bright Simmons, Honorary Vice President, Imani Africa. Dr. Theo Echampong, Political Risk Analyst and Economist. And Demba Tobega, who is Member Finance and Economy Pillar, Center for Social Justice. That's our guests, list of our guests for the very first segment. I'd like to begin with Dr. Theo Echampong. Hello, good morning, and thanks for joining us, Dr. Theo Echampong.
Samson, pleasure to be here. And forgive me, I've got a bit of a cold, so my voice may be a bit hoarse.
That's cool. Thank you very much. So we have followed you in the course of this week, and we have heard your views on what is going on, particularly on what the country is likely to lose, even as we go in for the IMF bailouts. From your reading and from what you have, come to know so far, what are we likely to give for how much?
Yeah, once again, thank you very much. And I think to answer the question, we need to put it in a bit of context in terms of what does an IMF program bring to a country such as Ghana? And as you rightly asked, what is the likely trade-off that one would have to make when we decide to go for such a program? We know that we're likely to get anything between 2 and 3 billion USD, something a little in that range as immediate financial support that the fund is going to give to Ghana to meet or to address 2 or 3 key things. The first one is the balance of payments, or to put it in very simple terms, the dollar availability that we need to support a number of the imports that we're making. So almost 20% of our import bill is from petroleum products that we bring into the country. And if you don't have dollars to meet that, as we've seen the central bank in the last couple of weeks attempt to ration that, then you do have a problem. So immediately we get access to some money, but that money, or that 2 to 3 billion, is not going to be given to you at a go. It most likely will be staggered over a period of time where you need to meet certain benchmarks as part of the adjustment conditions that you make. So that's the first thing in terms of what the program brings. The second thing that the program would also likely bring us, in a sense, is because Ghana has lost access to the international capital markets. And if you look at how we have been financing our budgets over the last 10 or so years, these Eurobonds and other commercial paper that we sell is a key component of the financing mix of the budget, especially the external debt component, right, of our budget. And to the extent that we were not able to go to the market early part of this year because a lot of people basically didn't believe our numbers, the CD came under a lot of significant constraint. Going on the program in a way signals or sends a signal to the players within the market that we are on a sort of trying to fix the mess that we find ourselves in. Because prior to even the announcement of the IMF program, if you look at the sovereign spread, so Ghana trades its bonds on this international capital market And I provided some charts for your producers to put on the screen for the benefit of our listener. But if you look at the spreads, prior to that, it was literally trading above the distress levels, over 1,000 basis points. And since the announcement of the IMF program, we've seen a bit of a correction, right, in terms of the spreads, where it's come down a couple of basis points. So that then signals that going to the markets and the sort of investors that we're dealing with would have some sort of confidence in the Ghanaian economy and reverse the portfolio of outflows. Then you come to the question that you asked, what do we have to give in terms of, accessing these funds? Because it's not necessarily free money, and there are trade-offs and consequences that we have to, undertake, particularly when it comes to the structural reforms that need to be done. So it's going to be predominantly two things on the trade-offs of what we need to do. The first element of the program is going to be around restoring macro stability. So here we'll be dealing with things like revenue administration, and within that, things around tax exemptions, ports, the extractive sector. And then importantly, the second element of that being the expenditure measures that we need to take. And this is where a lot of the focus is going to be on the public sector wage bill. That's one. Number two, the rationalization of some of those sort of government flagship initiatives. So here we're talking free SHS, the NAPCO program, the USTAT that is meant to be implemented as part of the 2022 budget. All of those things will really much be on the table for some sort of cuts or some rationalization. And then within that, also things around reforming your state-owned enterprises, right, as well. Because we know that there's a lot of waste within the system. And particularly, I have argued that the size of government for economies such as Ghana is far too big. So those are the things that would possibly have to give up as part of a wider sort of 3-year program. But ultimately, it is us as a people and as a country that would have to implement these reforms. And the success or not really would lie down with us. And then, of course, we can come to the other debate subsequently of the whole politics and how we are politicized.
Okay. Thank you very much, Dr. Theo Champong. And I needed you to set this stone as to what is likely to give and what we're seeking. And thank you for doing that for us. Now, I want all of you to relax, and then we're going to take a presentation in the next 20-25 minutes, detailing how we got to where we are. That's sort of a recap because we did that last week. How we got to where we are, and perhaps the cost and benefit analysis of going to the IMF. Let's listen to Bright Simmons.
Right. To be able to share my screen in a second, if you just bear with me.
That's all right. So as I mentioned, yes, Bright Simmons is going to give us a presentation that will help all of us sort of recap why we are where we are now and what do we look forward to. Bright, are you ready?
Thank you very much,
yes, go ahead.
Samson. Thanks for inviting me, and my regards to Theo, who, as you know, is also affiliated with Imani. So some of the arguments that I'll be making are fairly similar to what he's made so far, but I felt that given the debate we've had so far, it will be necessary to attempt to provide a bit of a historical background to where we are and how we got here. So as I wait for the screen to be shared, I'm going to start by saying that we've been following the debate in civil society and in the think tanks quite closely. And in the course of doing that, we've noticed that, some of the politicization continue to prevent a very thorough understanding of the context that this IMF decision is embedded within. And it will be helpful if in the course of the next couple of months, we don't necessarily tone down the politicization, because politics is very important for us in managing our country, but we also give room to some of the facts that are, as far as we are concerned, are very critical. So now that I have permission to share my screen, I'll do so straight away. So like I said, first of all, it's quite important in order to have a sound debate that we first start by understanding the nature of the IMF program itself. The IMF programs are not one single program. You may recall that in a previous engagement on this very program, we tried to illustrate the different types of programs that the IMF offers and how they differ. In general, you're talking about two main types of programs, but in some respect, you can also think of three main types of programs. But I'll focus on a categorization that deals with two main types of programs. One program you might consider, using a very simple analogy, as some kind of outpatient care. And another type of program is similar to surgery or intensive care. So if you have a fever and you go to a hospital, they don't normally keep you in the wards to take care of you until you recover. Usually they give you some medicines and you go back home. And then there are instances where you have to stay in the hospital. They have to monitor you more carefully. And then usually, because the care is intensive, it's not allowed that you go back home. You stay there for a long period of time. If you think of the set of IMF programs, that's one easy way to capture the distinctions. So there are programs like the standby agreements, the standby credit facilities, programs like the flexible credit line, the precautionary and liquidity line, etc., which are designed for economies that are doing relatively well, but they have some short-term or temporary challenges. And usually for these programs, you have to already prove to the IMF that you don't have a lot of structural issues, and these challenges that you have are temporary. And once you're able to demonstrate, so they say it's ex ante conditionality. You must prove that already the things that you are doing in your economy generally means that you will not put the resource of the IMF at risk, or you're not likely, even if you take the IMF money, to get into a worse problem. That is one category of programs. And then you have the second category of programs, usually what we call the extended funds facility and the standard credit facility. And that deals with protracted challenges, where your challenges are persistent. Also, the assumption is that you go in not qualifying for money, but the money that is given to you enables you to become eligible. So it's an ex post functionality. And then you have to do changes to the structure of your economy or other aspects of your macroeconomic system. Now, the distinction between these is very important, because we've heard a lot of people make the point that, a lot of countries have gone to the IMF, a lot of countries have gone to the IMF, without trying to understand what type of programs the IMF offer. If you distinguish things that way, then the argument that some government spokespersons have tried to make in order to confuse the debate does not hold. This argument that half the world has gone to the IMF, and therefore this is a routine. The suggestion is that the problems that we are facing are just routine, temporary problems, and they will just go away in a short period of time, and we just need some little IMF money to cushion us a little. I think that portrayal of things is not very accurate. So I went, to the databases, and I put up every country that has gone to the IMF in the last couple of years, and the ones whose programs are still active. And you will see that, contrary to the argument that has been made, when it comes to countries that have active IMF programs in general, that's about 41 countries. Remember that what happened in 2020 and 2021, where the IMF went into its board and then was allowed to redistribute the quotas, the SDR quotas. So in essence, the simplest way to explain it is that they allowed everybody in the world to just come for money without having to undergo a program or to meet any specific conditions. That is not a bailout. So to use that fact that a lot of countries went for that money, including Ghana, and to persist that half the world has gone to the IMF for a bailout is just completely inaccurate. There are about 41 countries that have an active IMF program, a real IMF program, not the rapid credits facility that they disbursed to everybody that wanted it. And of that set, The ones that are in a managed midterm program, where the suggestion is that your economy has protracted challenges, has deep structural problems, and you need 3 to 5 years to fix them. There are just 34 countries in the world. And of those, only 5 in 2022 or 2022. So it is very difficult to accept the suggestion that, because we've had COVID in Ukraine, every country is totally on the brink of macroeconomic difficulties and have gone to the IMF, or at least half the world have gone to the IMF. It's far from that. There are about 200 countries in the world. If 34 of them are in a medium term, a medium term structural program with the IMF, that cannot be half. That is something in the region of 1/7 or something like that. And there are even countries in Africa that typically don't go for these long-term programs, though most African countries, because of the way in which we wait till things deteriorate to a certain level, when we go, we tend to get the EFF and the ECF, which is like surgery or intensive care. Senegal is one country that historically always go to the IMF for a standby guarantee so that it doesn't have to get to that stage where it needs that kind of intensive care. But most African countries follow the Ghana route, where we wait till we are in big trouble, and then we go to the IMF and we have to get intensive care. So that is very important, just to set the context right. That is not some kind of routine thing where we have a temporary challenge and we go to the IMF for just some little support. We are going for a program, and the only programs that we've ever qualified for since the last 2 decades, and is the likely program that we are currently negotiating, is medium-term structural reform type program, or in simple terms, it's an intensive care program. The other thing that is also important is that some countries have graduated from using IMF. So this idea that, the IMF, because we are all members of the IMF, we must consistently be going for ECF and EFF. As I showed you in the previous screen, if you look carefully, you will see that of the 34 countries that are doing these types of programs, 25 are in Africa. So Africa just tends to have this very persistent problem. If you look at the countries that were the biggest borrowers of IMF money before 2000, so since the IMF came into being in 1944, and then from 1947 when it started, providing these types of arrangements, you will see that most of the countries that used to be big borrowers of IMF money, fascinatingly, Korea was one of them, Russia was one of them, Brazil was one of them. Since 2000 onwards, they've more or less exited the IMF medium-term programs, and in some cases for almost all types of borrowing. If you look at the case of Russia, Korea, and Brazil, for instance, Argentina is the only big borrower that has stayed consistent. For Argentina, it's not clear what the problem is, but it looks as if for them, IMF is just going to be the way they roll. But that is an important point also, because it establishes that for some people, they go to the IMF, they build their capacity, and then they don't need the IMF consistently. Why is that important? Because remember that when they set up the Bretton Woods institutions, the IMF mandate was not really to help countries run their economies permanently. It was to provide surveillance, to provide periodic support to countries that were under pressure. And it was the World Bank that was supposed to be more responsible for the World Bank institutions, the IDA, the IBRD, and the others, that was supposed to be responsible for the longer term management changes in your economy that will transform you into a slightly better country than you are, or in time, a much better country than you are. So IMF money was never seen as like a permanent kind of pot of money that you are constantly using to fix your country. So that has meant, therefore, that some countries have really transited. And in that transition process, only a few countries remain consistent top borrowers of the IMF. So that's also important. The other thing that is also important to point out is that, yes, Ghana is not the only country that keeps going to the IMF. There are a whole bunch of other countries, but Ghana is one of the most noted. In Africa, I think it runs around 4th or something like that. So after Liberia, Mali, Kenya, Morocco, Ghana is the country that has gone to the IMF the most in Africa. So we do have a persistent tendency to go. The other important fact that I need to state the context is the fact that until about 1987, we also used to do what Senegal does, which is have standby arrangements, because we didn't want to enter into a full program with the IMF. And then since then, because we had allowed things to deteriorate to a certain point, especially in the 70s and the 80s, we had to start doing these extended credit facility programs. And most of the $1.8 billion that we now owe the IMF is in those facilities. In fact, all of them are in those facilities, except the rapid credit facility that was just distributed to everybody that I mentioned. So that's also kind of important. The other critical issue is that there is something about this specific return to the IMF, and that is very important. Usually, there are a number of, I'll say, three main reasons why you go to the IMF. One of them will be balance of payments, where the simplest way to describe it is that the money that leaves your country and the money that comes to your country are not balancing. And that could be because of trade issues, could also be because of current account movement issues. But in general terms, it tends to have a huge effect on your currency. And IMF is very well known for that. So the balance of payments issue. The challenge is, even though the government keeps on saying that we're going for balance of payments support, we're going for more than balance of payment support, because we also have persistent deficits that link to our revenues domestically, and we have more critical and imminent debt crisis. Now, that third point, even though we've had debt service challenges for a while, so in 2014, we went to the IMF, for instance, we're spending 42% of all our revenues on paying debt interest. The problem with this time is that because of the way in which all these problems have converged in really serious form, that percentage of how much of our total revenue is spent on paying interest is escalating. So our debt crisis is the worst we've seen since the 80s and the 70s. And that is very significant because it gives you an idea of how we got to where we were in the 80s, which made us turn to these medium-term IMF programs rather than having standby guarantees or occasional injection of money when we need some balance of payment support. It started with the fact that by 1970, it was clear that we couldn't pay our debts. And the only way we could move forward was to host a debt conference, global debt conference in London and restructure. Now, the problem was once we got a restructure, we got the debt relief, we went back to our ways of refusing to get a proper program with the IMF where we agree on the things that have to be done structurally and fix them. And so by the late 80s, we're in a really dire situation. And that attitude of us going to the IMF for temporary measures, and then when we have to fix things on a more structural footing, we always exit so we can have our freedom and then go back when things are deteriorating, has become pretty much the pattern that characterizes the way we've been doing things where IMF is concerned. The other important point that I also thought was necessary, given the debate that has ensued so far, is this view that, and it goes back to the earlier points I was making, this view that it's an acute shock, we've just had COVID in Ukraine and those are the issues. That's not entirely true, because when you look at the situation in 2014 and 2009, you see our recent programs, 2009 and 2015, which are similar to what we're going to enter into now. Those periods were also global economic crisis periods. If you remember 2009, we had just come out of 2007, 2008 global economic crisis. And you can see from the graph that I have on the left that the decline in the world economy in that period was worse than today. So the 2009 economic crisis was actually worse than the current crisis that we are facing, purely on terms of growth of the global economy and other factors. So while it looks as if this twin crisis of Ukraine and COVID is really problematic, the fact of the matter is that in 2009, when we went to the IMF, in our recent spate of return to the IMF, things were just as bad. It was also globally driven. Even in 2014, and I'll try to explain that, even though we didn't have a worldwide global crisis, for Ghana, we had external shocks that mirrored some of the global crisis conditions that we face today. Some of the issues that we pledged to do in 2009, it's fascinating just looking back at them again. Issues of trying to manage the deficit, issues of trying to address tax loopholes. We've been dealing with them for forever, for a decade and more, right? And so those issues continue to persist. In 2014, I've heard people say that, this situation is very unique because we didn't really have a global crisis in 2014. Yeah, we didn't have a worldwide crisis, but for Ghana, the collapse of commodity prices always implies an externally induced crisis. So if you look at the price of gold and the price of oil, we have significant downturns. You can see around 2014, 2015, that both commodities suffered significant price collapse. And then cocoa also, had a cyclical downturn. So we had this situation with single spine where we had literally doubled payments to states and public employees and a massive commodity price crunch. And the two conjoined forces meant, therefore, that the effect on the fiscals was as similar as it is today. In a simple terms, we've had these recurrent challenges, and attempts by politicians to create distinctions among them are not very educative if you really want to take a good look. The other point that I also wanted to make quickly is that our borrowing costs have surged. And that borrowing cost, the surge of that borrowing cost is also historical, has very little to do with COVID or Ukraine. We've had these challenges. One of the big changes, though, and that is why I think this crisis is particularly different, is that the amount of money we've been borrowing is been escalating in ways that suggest that we become used to simply borrowing for everything. And look at the fact that since we first started borrowing from international private capital markets, in simple terms, started going for the Eurobonds, we took from 2007 to 2017, for 10 years, we used that period to raise about $4.5 billion. Look at $4.5 billion and look at how in time we've surged our borrowing to more than $13.2 billion today. So in a very short period of time, from 2007 to 2017, for 10 years, we borrowed about $4.5 billion on international capital markets. And then for just about 4 years since then, we borrow an additional $8.5 billion or more. So we've more than doubled our borrowing in that short period, that 4 years. That was very significant. And if you look at how much we are spending on debt service, you can see clearly how much of our money, our revenues we use to pay debt. You can see clearly that the sudden rise, is steepest after 2016. So the amount that we are, currently, devoting to paying debt is escalating at a rate that is way before our last visit to IMF, all right? And so that debt crisis component, so I remember I said there were three major ways of describing the situation that currently confronts us: the balance of payment issues, the persistent deficits, and the debt crisis. The debt crisis, I think, currently is worse than it was in 2014, 2015, and probably the worst we've ever seen since the 70s and 80s, when we had the yen 2 episodes and we had to do debt structuring, restructuring, etc. And of course, after HIPIC, the assumption was that we now had a clean slate, which does not appear to be the case. It also leads to this situation where, because a lot of the composition of our debt is given to commercial debt, the nature of where we borrow our money have changed dramatically. We're not borrowing money from sources where the debt is very expensive. It's created a huge amount of pressure on our ability to service that debt, which was evident in the graph that I showed you in terms of how much of our money we are currently devoting to paying interest on our debt. That has also then led to this complete lack of confidence in Ghana's ability to pay back the debt that we owe international creditors. And that current situation is such that we are the worst in the continent. If you look at how much our Eurobonds have been discounted by the market, in the simplest way to look at it is what an investor will probably lend to, the rate that an investor will lend to us if we were to use how our current debt is performing as a yardstick. And we are the worst on the continent by far. This was not the case 2021, right? We were bad, but not that bad. Now it's really, really serious. So if you take these factors into account, the assumption is that we really are in a worse situation than we were when we last went to the IMF, mostly because we have unfinished business. When we were exiting in 2019, we wrote a letter to the IMF to say that even though we have not met the conditions that we set ourselves when we entered your program, we think things are doing so well, or things have improved so dramatically that we want out. So first of all, we asked for some waivers of the conditions that we had agreed with them we will fulfill before they give us the money. And so we wanted the money, the 7th and 8th disbursements at once. We can't do these things that we said we'll do. One of them was the wage bill. The other one was the next international reserves situation, primary balance, and to some extent also central bank financing of the government deficit. In simple terms, we went to the IMF and said, these are things that we said we would do. We think we can't do them now, but because our economy is improving, forget about them and give us the money that is due or the money that you have. Because usually what they do is that they don't give you all the money at once. They disburse them as you meet conditions. The reason, though, why the growth was doing so well, I think we somehow gloss over it. And that is the cause of the problem we are facing now. The growth was primarily due to the fact that oil expanded because Sankofa Jinami and the rest came on stream. Commodity prices that had declined in 2014, 2015 went back up. And then we also started to get access to international capital markets, so a lot of money was coming back in. And then most of these things masked the fact that the structural conditions have not been met. So the reasons why we said to the IMF that we want to exit and forget about these things that we said we would do is because we said that was because our economy was doing so well. But if you look deeply behind the scenes, it was because of factors that were not necessarily due to policy improvement. And you can see that from all the unkept promises that we made in that period. We said we would tighten the exemptions regime for taxes. Up to now, we've still not been able to pass the agreement, the laws that will make it possible for us to tighten that exemptions regime up to now. And we said back in 2019 that, even though, in 2016, when we're going for our review at that point, that we're going to do it by 2019. By 2019, we hadn't been able to achieve it. And we were still telling the IMF that we want to get out. Property rate reform. Look at what we've now done with this DCS problem that we currently have in our hand. Clearly, we're not going to be able to do property rate reform anytime soon. Issues with sound receiverships for the banks. The receiverships were supposed to help us with recovery. We're supposed to make money back from the banks that we'd resolved so that we can cover some of the money that we've spent. Look at how badly that has been managed. Public sector reforms are stalled. Last time we did a review on that, most of the money had gone to buying cars for public agencies as opposed to doing massive reforms and to improving productivity of the civil service. Public debt was to stay below 65%. It's now over 80% if you are being very candid and adding arrears. Energy sector reforms, all of these things were not done. Then on top of that, we start to have these delusional ideas of what is going to change from 2019 onwards. We said we're going to hit 1 million barrels of oil per day. Today, we are struggling to do 150,000 barrels per day. We said we're going to use fintech to completely transform the services sector and the rest of it. Now we are imposing yield levy, and from the latest research conducted by some of my colleagues, including Dr. Champon, who is on the show, we know that we've damaged confidence in financial technology solutions significantly. We talk about integrated bauxite program and how that was going to transform our industrial base. We know the San Hydro project is more or less abandoning that anchoring of the bauxite program to infrastructure. We said a whole bunch of our NAPCO graduates were going to move into commercial production. We're going to get them involved in activities that generate money to be used to pay them. We now know that even the whole NAPCO thing has to be scrapped now because, look, it's not sustainable. We said we're going to have 10,000 of them in commercial enterprises. Not even 100 have been able to transition from getting government money to go into commercial enterprises. Look at the sheer number of programs, targets that we just couldn't meet. Just look at them. All the things that we said were critical. By the end of 2019, by the middle of 2019, we had not met them, but we wanted to exit from the program. Even simple things like migrating government workers to the central payment system we have in Ghana called GIFMIS and the HR management system, we still have some lapses with some agencies still not migrated. Almost all the key progress indicators suggested that we're not yet there. We were not yet there because we're not meeting the structural reform part of the program. So the quantitative performance criteria in other areas were being met, but the structural changes, which is the thing that keeps us going back to the IMF, we had not met them by our own reckoning. And yesterday we insisted to the IMF that we had to leave in 2019 and they should just give us the money and walk away. We had not done so well also when it comes to the things that we are already working on that are structurally related. Compared to other parts of Africa, we spend more on our civil service, though we have fewer civil service employees than some of the countries that we typically benchmark with. Our revenue coverage in terms of how much money, how much of our income we spend on debts and paying of employees is the highest in the region. These are major problems, huge problems. Lastly, and I know I'm running out of time, we also started to mismanage our revenue sources. A lot of people forget that Ghana primarily is still a tri-commodity economy. Until about 1995, cocoa provided maybe 80% of all the external income we made. And then since then, we've seen significant structural changes to the economy, but it's still in the commodity sector. It's primarily gold, oil, and cocoa now. Now, let me very quickly run through why I think that in those segments, which are major revenue drivers, we are doing everything we can not to be able to make the right revenue. In the area of gold, everybody who studies that sector knows that the real challenges we have is not in the royalties. The royalties are short. Whether the companies make profit or not, they pay us the royalties. The real problem we have is that we have 10% equity in some of these companies, and they don't pay any tax because any dividend because they claim they are not making profit. We are supposed to get maybe 25% to 35% or something like that in total tax stake. Most of them continue to insist that they don't make profit, so we don't make money. If you want to reform that sector, is it the 45% you are not getting, the potential 45% you are not getting, or the 5% that you are consistently assured of getting that you need to go securitize and put on the international market and sell? Which one should you do? And then we decided rather than tackle the equity issue and the equity dividend issue and the tax issue in the sector, would rather take the royalties and go and securitize them in London and sell. Now, that problem is evidence of why we now have this situation we have in gold, where every time we try to fix illegal mining, gold production drops significantly, as it did last year. Take oil. We know we have to attract investment into the space, because one of the challenges we are having is that investors are not bringing in enough money to do exploration and find more oil. And that is why the 1 million barrels of oil a day we told IMF will be hitting around 2023. We are now on course to actually hit not just a little above 15% of that. Part of the reason is that the investment is not flowing because of our conduct. We look at this issue that we have in the Westcape 3 Points area, and the OCTP issue between ENI Vitol and Springfield, where someone has spent $6 billion, the largest single investment in the oil sector, discovered a large oil field. Somebody next door has not even finished doing appraisal for us to know how much oil is there. You say they should combine the two fields and give the other party, because it's a Ghanaian, 55%. And no matter what they say, no matter the data they show, no matter the analysis they say, you refuse to engage with the analysis until they go to the international arbitration space. And now that has led to a situation where a lot of other investors, when they speak to us in the think tanks, in the civil society research movement, you find that they tell you, constantly that they have challenges with the way in which the sector is being managed. And then we have some issues also in cocoa, where all of a sudden cocoa is now a loss driver for Ghana. So this is an area where we used to make some net gains in Forex. Now, when you look carefully at the cocoa sector, it looks as if, given the debt that cocoa board is piling, it's an ability to meet some of its international commitments, etc. Cocoa is actually becoming a loss driver. So these are heavy problems. And quickly, and all the evidence show that well before COVID, well before Ukraine, Ghana was already in some of the critical areas like debt service and the like, doing badly compared to other countries. Now, is the argument that these countries were not hit by COVID and Ukraine? Look at our bond spreads before COVID and after COVID. Why is it that our debt is more costly than other countries, even though we all suffer the same COVID and Ukraine? So the evidence doesn't show anything to suggest that the primary challenge that we face is Ukraine and COVID. Of course, it's contributory factors, but I'm saying that independent of that, measuring us or benchmarking us against other countries tell you that because all those countries are also suffering from COVID and Ukraine, if we are worse than them, then there's something more than COVID and Ukraine at heart. So I will end there, and if there are questions, I had some limited issues around, what is that we are likely to gain from the IMF. Maybe I'll just go through that in 1 minute.
Yes.
The key issue is that...
Yes, if you can do 1 minute with that.
1 minute, yes. The key issue with that is that right now, when we go and we borrow from the private markets, which have become so fond of, we are spending a lot of money on fees and charges to all manner of consultants and professionals, some of whom are in this country, some of whose organizations are actually affiliated with the government. And with IMF, we are not going to spend that money, and so those consultants are not going to get that money. But it also means, therefore, that the cost of borrowing to Ghana will be low. Some of the IMF facilities attract zero interest rate. The ones that attract interest rates, maybe not more than 2%. So if you look at all the costs that we're incurring on the private market, any money we get from the IMF, and it's not going to be as large as what we're getting on the international private capital markets, of course, but that money will be cheaper. So that's a useful thing. The other thing is, it doesn't mean that when you're on the IMF program, you can't go back to the international market and borrow. Just that you have to borrow at a reasonable rate. Our last highest economic growth was observed when we were under an IMF program. So the IMF program can be mixed with the capital markets, but you have to do it in a way that does not overburden your ability to pay. And that is very critical. The last point is also that the government will have to tell the truth a lot more about the economic situation and be more factual. In the last program that we did with the IMF, we lied about how much of our external arrears were due. We had, some arrears due to Exim Bank in India and other places, and we were hiding them or we were negligent about them. And the IMF found out, and we had to write an apology letter to tell them that, it was a mistake due to administrative error and things like that. So the extra vigilance means that the data that we're going to be used for analysis about where our economy really is, that data is going to be better and superior because of the fact that there's extra vigilance. And I think those are some of the advantages that we are likely to gain. However, the IMF is not a short-term solution because it takes a number of months typically to get a program. The staff of the IMF have to agree with us on what the issue is. And typically, given that we have been, argue among ourselves whether or not we even have a real crisis, that potential distraction could mean, therefore, that it keeps longer before we get agreement with the staff, and then the board have to approve. The average waiting time is around 115 days, according to researchers. But some countries like Zambia have been waiting for 5 years to close an IMF program. So you need to understand that we need to do things even before the IMF program kicks in, because we have an imminent debt crisis, which requires really serious thinking about how you're going to start meeting the debt servicing that is falling due this month, this quarter, this year. Thank you very much.
Please try and process that. We take a quick break. We'll be back. Right. This is Newsfile. It's your most authoritative news analysis platform. And here on Newsfile, we put Ghana first. It's brought to you by Bank of Africa, MTN, Ashesi University, Robert & Sons Optical Services, Waylead Properties, and Fanat Ghana. And you have just been listening to Bright Simmons, Honorary Vice President of Imani Africa. And what do you make of his presentation? Insightful. But there's something that caught my attention. Theo, I want you to come on for just a minute before I come to my guest in the studio. Something caught my attention when he brought up the slide about the Eurobond that we have been going over the years and borrowing. And for a very long time, we had done just about 4 billion. And just in 4 years, we were able to go push it up to in excess of 13 billion US dollars. I discovered that on that figure, even Nigeria, on that table, even Nigeria, the most populous country, in excess of 200, as in its population, in excess of 200 million people, is doing a little over 10 billion in the Eurobond market. And we, Ghana, just about the size of Lagos, we are doing in excess of 13 billion. I don't know, that really sets me thinking. What do you say?
Actually, the number is far bigger. Since we started, since we started going to the market, collectively we borrowed a little over $15 billion as Eurobonds. And I mean, the point really is that we have pretty much become what I call debt junkies, right? So
I'm getting an impression that even though we would have done in excess of 15 billion, what is outstanding is 13.1 something billion.
Absolutely.
United States dollars.
Yes. And the reason for that is that we're not fixing the very structural or difficult problems that we need to as a country, some of which Bright very well talked about. In fact, I had a couple of slides that I wanted to show, but he's done enough justice to the topic. But the point is that since we became a lower middle income country in 2010, and since we had the big HIPC relief initiative and the multilateral debt relief from about 2007, the only way we have tried to fix this economy is just to borrow. It's as simple as that. You can look at all of the data and you can see the rate of debt growth, and particularly the composition of the borrowing from the external market, i.e. Eurobonds, becoming pretty much a mainstay of the financing mix of this country. The challenge is that when we even go and take these monies, right, they're not necessarily going to even finance productive investments in that respect. If you look at all the prospectus that we've been issuing, a major chunk of that money comes in and it goes to service the principal, the interest payments on some of those existing debt.
Not even the principal.
What you're really doing is you are just kicking the can down the road. And so anytime you have an external crisis or shock like we're having now, then you find your economy in a very, very difficult, bind or opposition.
So my questioning is driven by this thinking. Are we ever going to get out of this pit?
We can get out. The thing is, you can get out by fixing the politics. I have said that the economy is only a symptom of a bigger problem. If we fix the politics and the governance, the economy necessarily will actually get out right. But you see, we tend to treat the economy as some sort of silo thing, forgetting that it is human beings, it is incentives that give rise to certain course of action that we take. So when we are discussing the debt issues, the balance of payment crisis issues, and all those related things, yes, they're important, but I think fundamentally the solution to that is how we run our politics in this country, where we're pretty much over politicized a number of things. And you know, Bright talked about something, but I probably just want to share my screen here again, just to reiterate the point and why we need to fix the issue. This was an article I read yesterday from Bloomberg, and where they were analyzing all the countries or a number of the emerging market economies that are facing pretty much a debt crisis or a looming debt crisis, in part to do with the deficit issues, and then in part to do with the balance of payments issues. And you can see actually quite very clearly here on your last right-hand side column. If you look at the ranking, Ghana is number 2 in this assessment of countries that have a sovereign debt or higher sovereign debt vulnerability ranking in that respect. And if you compare to Cote d'Ivoire, our next door neighbor, right, they are relatively doing much better than us. So the argument that Russia, Ukraine, and COVID and all of that, yes, it does have an impact, but the issues, particularly with the Ghanaian economy, are much, much more, nuanced and much more peculiar to us in that respect. Because here you are, 2 countries, Ghana and Cote d'Ivoire, but you can see very clearly that in Ghana's case, we are actually ranking number 2 in terms of a number of emerging markets that are facing, a severe risk of capital flight and issues around, a looming sort of debt crisis.
And Cote d'Ivoire is ranking 26.
Yes, Cote d'Ivoire is doing much better, than
that's far better.
Other African countries, Bright talks about Nigeria and the rest, but you can see Senegal, Nigeria, the rest of the other countries doing much better. And it's only El Salvador that is at the top, and we are second in that. So the problems are very peculiar to Ghana, not just Russia, Ukraine.
Before I come to my guests in the studio, I want you guys to, and if Bright is still there, just in some 30 seconds, can you tell us, apportion how much of this situation is blamable on COVID and Ukraine rather than incompetence in managing the economy, rather than the wastage, rather than the wastage that occurred during the elections, as we have been told, among other things? In percentage terms, what will it be?
Samson, COVID is primarily growth, right? The big impact with COVID was that we had a slowdown in economic activity, and that led to a fall in growth. And we've measured that for 2020, 2021. We are very clear how much of a retrenchment in our growth was due to COVID, right? So you can literally quantify that and then take it out, right? So if you did that, and then you look at Ukraine, which is mostly imported inflation, the increase in price of oil and things like that, and you unpack that, you will find out that 65% to 70% of the problem is still unaccounted for. You get my point? So with COVID, the main channel of impact is in growth, because you have reduced economic activity. So you can say, okay, how much growth did we lose? And we lost growth in 2020. I think we declined to, I have the chart here. I can take a look in a minute. We declined to almost no growth, about 1% or something like that. I have to look at the latest revised numbers. So you say, how much did we lose? Instead of maybe doing 5%, we did 1%. We lost some money there. But that money would not have made a major difference in terms of how it would have impacted taxes or any of that. Then we had fiscal spending related to COVID, But then you look at how much other countries spent relative to their economic size and how much we spend. And that we had a chart on there that shows that we spend far less compared to some of our neighbors, including Senegal and others, relative to our economic size. So if you take the two main areas in terms of the fiscal impact and then the growth impact, and you tease that out of the numbers for COVID, you don't get the substantial deterioration, or it doesn't explain the substantial deterioration that we've seen. And in the case of Ukraine, the Ukraine conflict is primarily matters to do with commodity price-driven inflation. Now, that imported inflation is partially offset by the fact that we also export some commodities, and the price boom has helped us from a revenue point of view. So you need to balance that out. And then what remains, you take it out of inflation, and you will still have significant amounts of inflation after you've accounted for the imported inflation.
Right. So, but the question again, thanks for the elaborate explanation. I'm asking if you were to estimate.
Yes.
We have come this terribly worse and have been pushed almost without an option to go to the IMF. If you read from the Bloomberg and the rest of them, we have been shut out of the Eurobond markets. We don't have any access anymore. So this is pretty much having been forced because we couldn't do anything else than to go to the IMF. How much of this deterioration is blamable on wastage, the corruption, incompetence in managing the economy, rather than the COVID and Ukraine situation?
Well, global inflation is now around 7% instead of the 5% or so it was forecast to be. So you can take that extra 2% and say, well, you take that out of our local inflation of something like 28% now, as at last check, and you are still left with 26%. So if you look at it carefully, 80% of the problem is domestic, and 20% of the problem is, and I was just using inflation as one benchmark. You can look at other benchmarks and do the same. Say, how have global conditions deteriorated versus local conditions, and you subtract them. Of course, the methodology is more complex than that, but on the whole, you come to a conclusion that about 80% of the problem is domestic.
Right. Dr. Theo Champong, do you subscribe to this, or you will have a different estimate?
I haven't worked any numbers. I'll be very forthright.
Yes, but from where you sit and from the work you have done, if you were to guess, just estimating.
Not guess, because we need to really run the full sort of modeling to really come to an objective answer. But what I have looked at is the fact that a number of the issues with the economy predate COVID and predate the Russia-Ukraine conflict. You can look at the numbers in terms of the debt overhang, because just as we finished the last IMF program in 2019, I remember even that program, we had to extend it by about a year. Originally, we were meant to have finished, I think, 2018 or so, thereabouts. But if you look at the benchmarks that we said we were going to attain, and Bright showed you, many of them we did not meet. And immediately after we exited that program, we started piling on debt, right, again. And you can see, again, even in terms of some of those growth numbers as well. So what is very clear, even without doing the detailed sort of quantification, is the fact that the structural issues were there. And what the Russia-Ukraine conflict and the COVID really did was to expose that soft, underbelly. But I don't have any hard numbers as yet from where I sit to be able to,
Right. Even the World Bank's country representative in Ghana had said that our economy was getting bad ahead of COVID. But I'll return to the two of you when we are sort of wrapping up on this subject matter to find out where you stand when it is said that it is the last IMF program that the NPP government inherited that actually kept the economy in shape. And things just went bad after going into the elections and coming out of the elections. The CDD, has done its work and estimates that it will cost a successful presidential candidate in excess of $100 million to prosecute a campaign. parliamentary elections, the MPs will need about, 4 million Ghana cedis, so to speak, to prosecute a campaign. It cannot be hidden that once you are in government, you'll find the money in government, not anywhere else, in the name of doing projects and other things. So where do you stand? Was that project something that the IMF last project that held the economy up to that stage in that sound manner? And then you conclude with what you think, we are likely to suffer because of what we are going to get. Yes, so John and Afia-Makin, thank you so very much for your patience. Yes, John, I don't know if you like to start from where I got really surprised, where in the Eurobond market, yes, we have been shut out of that market because we have unsustainable debt. And if you look at Theo Champon's table, countries at the risk sovereign vulnerability in terms of debts, we are number 2. Cote d'Ivoire is 26, doing pretty well. Questions are being asked about, why? Are we the only ones that COVID hit? Are we the only ones that, Ukraine situation, concerns us? But when you look at the borrowing level, and you see that Nigeria, even Nigeria, almighty Nigeria, is doing a little over 10 billion, and Ghana is doing in excess of 15 billion, but we have 13 billion plus outstanding. How do you interpret that to the ordinary person? What does it mean?
Okay, thank you. Let me commend Dr. Theo and Bright Simmons for that elaborate discussion. Like you said, normally it's not a problem to borrow as a country, provided you are borrowing to invest in critical infrastructure, capital expenditure that can bring you some return. So you recall that we borrowed about 1 billion to build a Tuapo gas processing plant. It's proven to be a game changer because if you read the Energy Commission's document, in terms of import substitution alone, we're making an annual savings of over 300 million. We borrowed to build Kotoka International Airport. So borrowing per se is not that bad. Moreover, if you refinance, it simply means that you are borrowing from Afenyo to pay John. So your debt must not increase if you are doing refinancing. And if you look at the annual debt report, I think this page 20, table 5.6, it gives you a breakdown of all our borrowings. So between 2013 till date,
this is IMF.
No, this is Ministry of Finance.
Okay.
This is from the Ministry of Finance. By law, they are supposed to submit the annual public debt report to us on how we are managing our debt.
Okay.
We borrowed 14.77 billion between 2013 to date. Between 2013 to 2016, we borrowed $3.7 billion. Then, when President Akufo-Addo took over, till 2016, he borrowed over 10 billion, about 11 billion.
A total of what Nigeria has borrowed?
Yes, 11 billion. Within that short space, that's about 4 or 3 times what President Mahama borrowed in its entirety. But what we used to do was that you establish what you call a sinking fund or an escrow fund. Put something there so that when it matures, you would get something. But what this government decided to do is that they will do refinancing. Refinancing means we borrow, say, 3 billion, pay 2 billion that's maturing, and use the 1 billion for budgetary support. Then you must ask yourself, where are those monies going to? That, for me, is critical.
We have been told time and again that much of the borrowing by this government goes to pay our debt. Now, I can't understand when you lay the figures bare that during your period you had done 3.7 billion, and that Akufo-Addo's regime has done in excess of 10 billion.
Yes.
Why is it that there's so much interest in our 3.7 billion that paying it we need about 3 times to service that debt?
Well, usually you don't even borrow to pay interest, because normally when you borrow to pay the principal, it's known as zero financing. So it's like refinancing. But that's what the interest. Because you borrow to do some project, it must pay for itself. So if you look at our borrowing, over 60% of the borrowing went into capital expenditure, critical infrastructure. If you look at President Akufo-Addo's borrowing, less than 50% went into capital expenditure. In fact, in 2019, when they borrowed most, 2.4 billion thereabout cedis was used to finance free SHS. So they're happy. You've paid parents' school fees. But the following year, you have to start paying the interest. The money is just not available. So it started catching up. So interest payment is moved from 10 billion when we're living. Now we are doing about 44 billion. Amortization is going through the roofs. And like Bright said, in 2019, when we exited the IMF program, we programmed to pay about 5 billion amortization. We ended up paying 11 billion. What that means is that the investors were not convinced. Because when you program to pay 5 billion and you end up paying 11 billion, then you must go to the reserves or you must borrow more to pay, because that means that there's a run on you. And in 2019, I'm just trying to distinguish the issue pre-COVID and COVID.
Post-COVID.
So 2019, the cedi depreciated by almost 13%, about double the depreciation in 2016. That should tell you something. If the cedi depreciated by 13%, it means there's a run. And in Ghana, we have domestic and public debt. In the US, domestic and public debt is based on nationality, because they deal with dollars. Ghana is based on currency. So when you have cedis, we classify that as domestic. But within that domestic, Franklin Templeton and all those people, we borrowed dollars and converted it into cedis. But when you pay the interest rate of about 19.5% on $2.5 billion cedi equivalent, and you pay it every semi-annually, when they take that money, they then go to Bank of Ghana in 2019. They say, we want dollars. Because we want to convert that cedis to dollars. So the real situation started showing in 2019. Then the deficit. You were reporting deficits under 5%, IMF reporting deficits over 8%. And it's this deficit that transforms into what you call your debt. So clearly, by 2019, getting to the end of 2019, we're having a major problem. And when you look at the 2021 media review, the manufacturing sector declined. The construction sector declined. The financing sector declined. The fishing sector declined. So you are seeing a huge GDP, but you are not generating the revenue from that big GDP to finance it, because you are borrowing so much into the economy. And our economy, we value our GDP by the expenditure approach. So when you spend more, the GDP will grow, but you won't get that revenue in order to deal with the situation. And so, moving into 2020, then COVID sets in. And quickly, this issue of COVID. We are told that, we are in this mess because of COVID. Total budgeted COVID expenditure in 2020 was 11 billion. We ended up spending only 8 billion. That's a reality. We spent only 8 billion. In fact, our projected total revenue that we wanted, we got more than 7 billion of that amount for COVID. Because from 2021 and 2020, we spent only 12 billion. Meanwhile, we made 17 billion and another 2 billion. But ask yourself, even that COVID expenditure of 8 billion, which was way below what we even budgeted for, where did we get the money? 1.2 billion of that amount came from the stabilization fund. So that should not have a negative impact on you.
And you are talking cedis?
Cedis. $1 billion, and that's where the special drawing right comes, which virtually every country, IMF said, look, because of COVID, mobilizing funds is difficult, so we're giving money.
But you take note of the fact that at this time when you say the economy was not as it were showing and certain sectors were not growing, we were spending in excess of, is it 25 billion to take care of the banking sector?
No, I'm talking 2020. 2020. If you look at the revenues, 55 billion, and the expenditure of about 100 billion, 8 billion of that is attributable to COVID and COVID-related expenditure. So you cannot blame just 8 billion to say that that's why we are in this mess. And I'm saying that even that 8 billion, ask yourself the source of the financing. 1.2 billion from the stabilization fund. The World Bank gave us 5.8 billion. That's the IMF rapid credit facility. We are not paying any interest on these funds until 2025. African Development Bank, 406 million. The European Union, all these agencies gave us money, but decided that they would defer the payment. You see, we are going to the IMF because of two principal issues: balance of payment challenges and macroeconomic stability. Now, your balance of payment challenge simply means that you cannot pay for what you buy compared to your other countries because you interact with them. My point is that the impact of COVID in terms of the cost structure is not even reflected now. Whoever will become president in 2025, and I'm convinced that President Mahama will be president, would have to cough up extra 11 billion. If you look at our trajectory, we've postponed almost all the payments to 2025. So you cannot blame just COVID for the challenge that we have. And if you look at another table from IMF, deficits, Cote d'Ivoire did 6%, Nigeria about 6%, all of them in 2020. Ghana did 15.7% in terms of the deficit. So a chunk of that deficit was not because of COVID expenditure, but clearly election-related pressures that is now catching up with us. And so we have no choice than to go. Because if you look at the January, February, March Ministry of Finance report for this year, total revenue was about 12 billion. Total revenue. Meanwhile, debt servicing, that is interest and amortization, is 13 billion. So our total revenue cannot even pay for the debt, let alone pay wages, pay other statutory payments. So we are in a deep, deep, deep situation.
Well, as we understand, if we are not careful, we are going to need the IMF to help us pay salaries, so to speak. Now, John, from what you understand so far, what is likely to give? Free SHS, we understand from communications from government quarters that that one has been isolated as untouchable, non-negotiable. It should stay without anything happening to it. We're waking up today hearing about feeding in some of the secondary schools, the difficulties they can't feed, and they are likely to shut down as a result of that. This is not a new problem. You had mentioned earlier about funding free SHS and the difficulties with it. In fact, this finance minister was overcome when he attempted to suggest an alternative to the free SHS implementation, where you could see the very reasonable people, agreed that the approach was wrong. And the best way was not to do it the way we are doing now, because it's not sustainable. It looks like we have now come to that reality. So what is it that you see is likely to suffer? As for Agenda 111, 111 hospitals, it's not actually started really yet, so I'm sure that is easy to give up.
I think that you've raised a very critical issue. I think, Honorable Afenyo, it's about 1 cedi per pupil.
Not too sure.
So
it's not 1 cedi, it's less.
So let's even assume it's 1 cedi.
I think it's about 60 pesos or so.
And we say that we want to provide one hot meal for each people. When I was coming, I checked the price of just one egg. It's over 1 cedi. So already, even what you are allocating for free SHS, simply for feeding, especially the students at the primary level, I'm talking of even feeding, it simply doesn't work. That is one. Two is that go to the 2022 budget. We project total revenue at 100 billion. That's what we total 100 billion. Meanwhile, when you take the expenditure lines, debt servicing today, that is both interest and amortization, is about 50 billion. If you take compensation, you can't do anything about that. It's 36 billion. So that puts you in 86 billion. If you add statutory payments, they are statutory, common fund and all that. It's about 40 billion. That takes you to 126 billion. So expectation management is a critical issue. In fact, your total revenue, everything, cannot even meet 3 line items, let alone come to talk about capital expenditure, goods and services, and others. I heard the minister say that he wants to reduce expenditure by 20%. If you reduce discretionary expenditure by 100%, you will still not achieve that 20% cut. So certainly something must give up. And the IMF is not Father Christmas. What they do is that they sit with you, you give them a letter of intent.
Yeah, so the school feeder, I think it's 1 cedi per plate of the feeding. And they have been asking for an increment.
Because as we speak, inflation is over 30%. Fuel has gone up by more than 100%. The exchange rate today is about $8.2 to the cedi. So naturally, the purchasing power of that 1 cedi at least has reduced by over 30%. So you are now talking of about 70 pesos in terms of real purchasing power. I've seen reports that even put inflation at 49%. And yet, this government is insisting that all their flagship programs will stay. The IMF will do one first thing, something. The first thing is that they have to satisfy themselves about debt servicing. That one, they would insist that you do that. 2 is that you say you won't retrench workers. So wages and salaries, another 40 billion. What is left to be used? So government should even begin to manage expectation. This issue about, we strategically move into IMF, we are entering there with our own terms and all that. If you could do that, you won't go to IMF in the first place. So really, there are real challenges that all of us should brace ourselves to face going forward, because the situation is dire. It's really, really, really serious. And government must cut back on certain things. If I were government, my first option would be to look at food security. Because that for me is very, very important. There's one district, one warehouse. Most of them are uncompleted. And you see, that is where the drain is. One dam, one village. They were supposed to help with dry season farming. I've been to the Savannah region. Not even one dam out of the dams they constructed can support dry season farming. So you are putting a lot of money in all these areas, and the returns is even negative. Because you'd have borrowed money to build a factory, a warehouse. It's 70% complete. But as we speak, we are paying. But my final one has to do with the debt that we are not even adding to the national debt. Bright talked about Sino-Hydro. We went to borrow 2 billion. And we said, it's not national debt. It is a barter trade. And that we're going to process our bauxite in 3 years into refined aluminium. We'll use that money to service that facility. But in the agreement, it was explicit that in the event that we are unable to do that, government will have to stand up. I serve on the Mines and Energy Committee as a ranking member. I can tell you for sure that next year, when we start servicing that facility, we wouldn't even have a foundation in terms of a factory to process bauxite, let alone pay that. We've borrowed the hashish from Get Fund, over 2 billion. We've decided that that is not our debt. We've borrowed about 8 billion energy sector levy. We say that that is not national debt. We've borrowed so much by creating special purpose vehicles and deciding that we won't add that to our national debt. So that national debt of 80.1% as a percentage of GDP is exclusive of all these debt I'm mentioning. But when you read the budget and you look at the revenue and expenditure lines, you will see that the revenues are coming, but they are going out to service these facilities. So the minority will be meeting the IMF, and we want to make a strong case that all these contingent liabilities that are crystallizing ought to be taken account. And in our subsequent budget provisions, we must bring them from below the line and push them above the line, recognize them, and make provision for them. But what I know is that we are in for very, very difficult, very, very tough times.
Right.
It's just not going to be easy.
Let's hear from Afeoma King also. When you listen to the presentation done by Bright Simmons and you hear also from Dr. Theo Champong, I don't know what you have to say, first of all, before you go into your own analysis of the circumstances, including what you feel is likely to give. We just mentioned the feeding program, for example. Send Ghana, the NGO that has been doing a lot of work in this area, has been asking that it should be increased to 2 cedis, and that's almost impossible so far. People ask themselves questions. If you can't spend 2 cedis to feed a child in the school per meal, then what sort of meal are you giving to that, child?
Just go and say that
75 pesos. So
correct.
That's about. Yes, go ahead.
Well, Leonard, thank you for the opportunity. It's good to listen to my brother. Let me commend the earlier contributors for their industry, and they've given us their own views. I have some few disagreements. Of course, a theorist is likely to carry you away with his views. We combine theory and the practical work of politics. So definitely my duty is to deal with the issues that perhaps through their theory they fail to relate to the practical challenges that we're facing. First of all, I think Bright made a point which I consider very misleading. And to the extent that he says that less than half of the members of IMF have gone for support, I think that was the impression he created. I just want to state categorically that as it is today, about 100 plus members of the IMF have gone to the IMF for support in one way or the other. It depends on which...
They went when? I think
it's a matter of public...
That's the propaganda that people have been trying to explain. The government should stop using that refrain because it doesn't wash.
If you allow me...
No, it's only a matter of fact.
So what I'm saying is that it depends on IMF. You go there for technical support.
Mm-hmm.
You go there for financial support. Like you said, it's like, the body mounted surveillance monitors every economy in the world. So is it not true that about 100 members of the IMF currently are on a program in one way or the other?
Wait. And that
I kept quiet for you.
And that is triggered by COVID and Ukraine. Because countries that went to the IMF even before COVID have been lumped up in that number and claim that COVID has hit everybody and they are running to IMF. Ghana too is going, so no problem.
Okay, so let me make my point.
All right.
I am saying that currently more than 100 members of the IMF are with the IMF for support in one way or the other. Fact. 2, if you want to distinguish between those countries that applied earlier and those that applied post-COVID, that's a different matter. But I would want to make the point, very categorical, that as it is today, we have specifically 101 countries who are members of the IMF having a program with the IMF. Now, my colleague tried to do some politics, and because we are in competition and he tries to say that they did better in government than us, it is important I point out some of the inaccuracies in his earlier submission. First of all, the growth they left us with in 2016 was 3.4%. Pre-COVID growth in this country was 6.3%. You left us with an inflation of 15.4%. Pre-COVID inflation in Ghana was 10.8%. And then, of course, T-bill was far, far higher at the time you left office. Pre-COVID T-bill was 12%. These are facts that you cannot deny. Now, if you remember, Christine Lagarde granted the interview to Graphic and indicated clearly that because of the discovery of oil, your government then was carried away and you were doing more of expenditure without properly doing investment that would yield results. And that was the reason why you were going to them for support. I mean, that was categorically stated. You did not deny that fact. Now, what have we done as a government? NPP came into office with an ambition to relieve the ordinary Ghanaian of the pain. What did we do practically? One was the introduction of the free SHS. Spending money to educate our populace was our prime concern. Two, Ghanaians were complaining about the burden of paying high electricity tariffs. Major announcements were made. We didn't do propaganda. Major announcements were made where households benefited up to 18% in rebate. Industries got up to 25 to 30%. These can also be cross-checked from PURC. Now, these were all before COVID. Taxes were abolished and some were also reduced. Now, let me also state for the records that until the introduction of the e-levy, the NPP government had not done any major introduction of taxation in this country. Yeah, I said, the first major fiscal policy decision in terms of taxation. Check your record. The first major taxation policy introduced by this government was the e-levy. First major. Tell me other taxes that we introduce all over. So our focus.
So if you say other taxes, then there will be a list.
No, I'm saying
once you say major,
yes,
I think you are using major.
Yes. Excuse me. Excuse me. You know your impatience is going to obstruct our free flow.
But when you speak about,
I say that our major
when you speak about scrapping some taxes.
Yes.
And cushioning.
You did less interruption.
And cushioning Ghanaians.
Yes.
The question is, are you referring to that to make any blame? Because you say you are managing the economy competently well, and therefore you can afford to reduce some tax, and then you did that. Why should we have reference to that today?
Okay, so
if you say in COVID we sustained whatever and paid whatever. The question that is asked to you, which we hardly get an answer to, is how much did the World Bank, the IMF, and the Bank of Ghana collectively give to Ghana as COVID support? That's humongous amounts of money.
Lennon, our friends focused on the debt. My job in government is to focus also on the investment made. How much relief we brought to the ordinary Ghanaian. You are talking about Côte d'Ivoire, that Côte d'Ivoire is doing better. What major steps did Côte d'Ivoire take to relieve its populace during the COVID time? Did they provide free water? Did they provide food to support the many who were poor?
The people there will ask you, how many Ivorians died as a result of COVID?
You are allowed
how many Ivorians died as a result of COVID? If you raise controversial issues,
I'm not raising controversial issues.
How many Ivorians died as a result of COVID compared to Ghana? That's also a question to ask.
Well, but we also know that.
And today, the Ivorians, the taxi driver, the taxi driver or the trotro driver will show you that he is paying almost twice for fuel than his counterpart is paying in Ivory Coast. So the comparison just is simply obvious.
You are comparing. You are saying Ivory Coast is doing better. You introduced Ivory Coast. You made that relative statement, and I'm not entitled to a reply or response.
Please go on.
Exactly. You're saying that Ivory Coast is doing better. And I'm saying that to what extent? Like our cocoa farmers in Ghana. Ghana government is subsidizing more for our cocoa farmers than in Ivory Coast. Check the records. Ghana government is paying more to the cocoa farmer in Ghana than in Ivory Coast. It comes at a cost because you want to help the cocoa farmer. So you cannot compare Ivory Coast.
Dr. Champon showed showed the table.
Oh, and he's shown you
Yes, the table is a fact. It's not a theory matter.
It's showing you a table. A table saying what? Is that table categorizing specific interventions made by Ivory Coast during the COVID time?
Your sovereign debt vulnerability.
Oh, please. That is what he said. I'm saying something different. Sovereign debt vulnerability, we saw it, we ran second. I am saying that you brought in Ivory Coast, and I'm saying that the intervention that we introduced during the COVID, if we want to really compare, can we say that Ivory Coast did the same? Even for farmers, the support we are providing the Ghanaian farmer, cocoa farmer, is Ivory Coast doing the same? So don't let us look at them in absolute.
Because of the cost of fuel, you know how much fertilizer prices have gone to now. They are hitting the roof and the farmers are crying. So if in Ivory Coast, he will buy fuel, far less than you buy in Ghana, that's the question I'm asking. How does this comparison really work?
Now, did Ivory Coast government inherit, or did Ivorian government have to invest so much to resolve a banking sector crisis? We came in when, at the time, they themselves, and he has introduced the partisan argument, so I need to respond to him. When President Mahama himself, in his address to Parliament, had conceded that lack of supervision by Bank of Ghana had led to some failures in the financial sector. Records have it that there were technical advice given the government to clean up. They failed to do that. We were met with that situation. We had to take a bold step, clean it up, and pay the ordinary Ghanaian who had lost his money.
There too, you have been asked the question. You need 25 billion Ghana cedis to resolve a problem that will cost how much? Not twice the amount. People have been asking that question too. Just this week, the High Court, the Court of Appeal, said one of those decisions in revoking UniCredit was wrong, was unfounded. So people have made the argument that it's your choice, that this is the way to resolve the problem. And some say your approach was wrong in taking, the same paintbrush over all of the banks when some relatively could have been helped with the money to rather stay afloat.
Well, government was of the view that it would serve the best interest of the country to take that decision. But what I'm saying again is that having to pay people their money back, people had lost their money. It came at a cost to government to pay these monies. Could government have said that this is a private sector decision and that I will do nothing about it?
No, that was your choice.
Even as we speak, there are still people who have to be paid. Okay? So that must be understood or appreciated in that context. We come back to the issue of even the converts. That sub-sector in the educational sector. Apart from free SHS, government made huge investment. Today, if you go to all the vocational training schools across the country, you go and meet huge investment made. Practically, people can see equipment, buildings, and all that. So it is not the case that this government folded its arms, has incurred debts, and all that. No, that is not the argument. If you look at all the numbers, pre-COVID, we were doing better. Well, we were compelled to rely on our own internal policies, believing that, we were going to have a smooth ride. Introducing the e-levy was a major decision taken by government to help, get revenue to support our budget. But what have we experienced? We are not getting the needed revenue. Government has been open to say that, look, because of this situation, we need to rely on our external partner, the IMF. Is it wrong going there? No. It depends on the conditions that will take you there. Our case is that, look, having gone through COVID, which none of us anticipated. COVID did not take a month. COVID did not take weeks. COVID, persisted for at least 2 years. And even now, though the COVID situation has come down, but its cascading effects are still there. Companies that closed down have not recovered. When Ghana is not an exception, all over the world. Companies that suffered, the private sector that suffered as a result of COVID, have not fully recovered. Then the situation got complicated with this Ukraine-Russian war. Aren't we getting iron rods from Turkey, Ukraine? Those companies that are importing. It's a serious challenge. It's affecting the housing sector because everything is now expensive. And then the agricultural sector. I'm just returning from a program in Morocco on food security. And if you look at what countries are reporting, it's scary. So to me, the private sector financing door, which appears to be shut, can only be open if we have a policy credibility program with the IMF. Once we are with them, it does not to me also mean that IMF is going to impose its own conditions, but the IMF is going to sit with the country. What are your policies? What do you intend to do? And then hand in hand, we work together to achieve results that will be in the best interest of the country.
Okay, for a long time now, the IMF doesn't impose its own conditions, so to speak. So I also believe that it's a matter of fact that we always have to keep things accurate. When in 2015, Ghana went to the IMF, the IMF didn't bring its own, conditions.
I haven't said so that in 2015, IMF,
that's the narrative.
Well, we are talking,
this time around we are going and we have to take our own program,
Well, right. So I haven't said that. I haven't said what you are saying. Okay. But if you have an impression of a narrative, that's a different matter. What I'm saying is that going to the IMF means going with your program and jawing on it,
right,
and getting the best solution out of it for your own country.
Right. And at least now the NPP has come to agree or change its earlier rhetoric that going to the IMF meant otherwise.
No, you see, something. You are likely to rhetorically pick things out of context and then create a certain impression.
Sorry, let me
do you consider you've not allowed me to flow on my submissions?
We almost forgot
as you did for.
I should say not we. Almost forgot
yes,
that.
Yes, he allowed you to flow. And the viewers, I'm sure viewers would make a judgment out of this program today.
Please forgive us. Having listened to all our panelists so far,
no, I've not been listening to fully. I've not made my point.
What do you also have to say, particularly about what is likely to give and what we are likely to benefit?
Yeah, thanks for having me on, and this has been a great discussion. I think that there's no doubt that we can see across the board that the current economic situation is significantly impacting the lives of everyone, especially for me, extended family, immediate and extended family, and this conversation about what's happening and who's at fault, I think, is relative. Both Bright and Theo did an amazing job at giving the historical perspective as well as some of the challenges going forward with going to the IMF. But I think that if we were to really be honest with ourselves, looking at a situation where, the e-levy, which was brought on, which seems like, instantaneously due to the currency kind of collapsing and being shut out from debt markets. The first thing that happened was the government came up with the e-levy, right? And went to the most vulnerable, which were business owners and small retail traders, that had gone to mobile money during the pandemic to support themselves and continue to transact business. It's an interesting thing. And from a person who originates debt and structures debt and looks at securitizations and sees what other debt originators are looking at in terms of the ability of an entity to repay the debt, execution is crucial. So if you can have as many plans and ideas about generating revenue, if you're unable to execute on that or demonstrate that you're unable to execute on that over time, you're going to get shut out from the markets. Interest rates become higher. You can always find somebody who's willing to lend you more money at a higher rate and let you hang yourself. But in terms of where we're at now, we need real strategies that are viable and support the debt and have a debt sustainability outcome going forward. One of the things that I think Bright mentioned was the tri-commodity support in the economy. I think that's very important to recognize. Commodities are cyclical, they go up and down in price. And if we're solely relying on that, then we're going to run into challenges whenever there's a big fluctuation in price with servicing the debts. And the IMF, one of their debt sustainability, one of their aspects of debt sustainability is the focus on how reliant an economy is on the underlying or commodities that supports its revenue. So I think there's a lot of things and a lot of challenges that need to be looked at. I think that going to the IMF, in a lot of ways is a reflection in the mirror. We get a perspective from a institution that has depth of knowledge across many economies on how debt structuring and economy should be operating. And we can see, or we'll get the feedback on what it means to us and what we can change. I think that, if you were to look at timing, I agree with John that it's going to be a little while with some challenges. I've made that message just from, my understanding, to family and friends that I think it's going to be a tough road ahead for at least, a couple to 2+ years, because the challenges that are out there are significant and they're structural.
From your reading, what many commentators would like to say is that it does appear that the investments that, Ghana appears to be doing are rather investments that are looking forward to votes politically rather than will bring returns and help the country to repay its debt. Are you able to comment on that?
I don't want to put a political spin on things. I think it's interesting, from a person who originates debt. A part of the confidence would also be maybe in those that would help execute, right? So in other words, if the populace is losing confidence in government's ability to execute on their plans or stand by what they say or be able to orchestrate things, certain agendas, especially flagship agendas, then that's seen by debtors as a risk, especially when it comes to the term that a certain government and then maybe their flagship programs may be in office if there's no confidence. So, it's definitely a risk and one that I think the current government should consider.
Does it look to you from your examination of our circumstance that we are likely to win ourselves of the IMF anytime soon?
I think that is how forthcoming. All of that is dependent, right? I mean, the IMF is an institution that looks at a myriad of debt situations and all the dynamics that go into them, right? And so for whether or not, I think transparency is key. I think recognition is key of the problems that are out there. If somebody goes to borrow money and they don't recognize their own revenue cash flows or the underlying fundamentals or the challenge that they had that got them into the situation that they're in, it's tough for a creditor to not associate a certain higher interest rate or structure that takes that into account. So I think that the IMF being open to help with a resolution is really in the hands of the current administration.
The head of the institution had announced that about 100 countries were seeking sort of help from the IMF. Is it accurate to say that all of them are in the kind of circumstance that Ghana is approaching the IMF?
That I don't know. I think CSJ, which is Center for Social Justice, we're heavily focused on the most vulnerable and social economic infrastructure spending, so across health, education, and whatnot. So we've put together a report which also dovetails to the report that both Theo and Bright had presented. And I think that it'd be worth also taking a look at for viewers that are interested to see some of the underlying data points, across the board.
So the CSJ, what's the main point that you seek to drive home with your statement?
So our statement is that we are interested in a fair and sociable and equitable economic prosperity. So we, in situations, much like I mentioned with the e-levy, much like I mentioned with, free SHS, excuse me. We're very interested in the long-term socioeconomic infrastructural aspects of an economy that allow it to prosper over the long term, and that prosperity is equitably shared.
Thank you. I'll take about just 2 minutes each from everyone else and give Afenyo the last and final bite. So Dr. Theo Champong, I'd asked the question earlier, you and Bright, what are your responses in 2 minutes and looking forward?
Yeah, thank you once again. I think, look, we need to get serious because the times we're in are very dire and very challenging. And a part of dealing with the problem is actually accepting the reality. And to that extent, I think the whole attempt at propaganda and spin and, MPP did this and NDC did that, for me, it doesn't really help matters, and this idea that, there's a distinction between theory and practice and all of that. We work, or let me speak for myself, within the markets as well. And we know how these things, in a way, operate. And so I get a little bit worried when we try to make it look as though the theory is different from the practice. And I'll just give you 2 data points to wrap up. This is a statement from the Ministry of Finance's own website. It's actually dated March of 21st, 2019. And it says, IMF Executive Board completes last review of our ECF. And there's an interesting statement there, somewhere in there, where a lot of the issues that they were raising back then about commitment to fiscal consolidation, SOE reform, and the fact that we are overly reliant on foreign investors for the financing of the budget exposes us to, market sentiment and exchange rate. These things haven't changed, right? And these are the very things that have led us to where we are now. Second quick point on the issue of whether 100 countries have gone to the IMF or not. This is the IMF owns website, and this shows you the countries that have an active program or lending commitment with them as of June of 30th, so just about a week ago. And you can literally count all the countries down here, those that have either a standby agreement or an extended fund arrangement or an extended credit facility. And when you count all of this, it's actually 42 countries, nowhere near the 100 that is being made to look like. And the data points are there. And I'm putting this out there so that we can all go and look at the data and be able to objectively come to a firm conclusion. I think that the whole propaganda doesn't really help us. And we need to have an honest conversation on the way forward, as a country. And if there's anything that gives me a bit of confidence, I think the IMF coming in, we're going to have a bit more disclosure around the data points, this over the line, below the line, and some more transparency around that. And I particularly am looking forward to what they call the Article 4 report, which basically assesses the state of the Ghanaian economy, and the managers of the economy would have to come be forthright with the numbers. Because if you, it's like going to the doctor, and I'm wrapping up. If you go to the doctor and the doctor tells you you've got malaria and he gives you malaria medication, but you come back home and you say that you're going to take medication for kwashiorkor or beriberi, you'll be lying to yourself. The ailment will still be there and won't be fixed. And we need to have a firm, honest conversation as a country going forward. Thank you.
Thank you very much. Yes, Bright. And thank you indeed for, staying with us through to this point. Yes, Bright.
Thank you very much. I'm just going to share my screen for a second. I very helpfully, Tio has dealt with some of the issues. So at this stage, I just have to deal with a couple of comments that Mr. Markins made. And I think Mr. Markins has to bear in mind that when they start to give the IMF candor over the facts or about the facts will be very important. If you refuse to agree with the IMF about the basics of the economy, as you are disagreeing with the facts that we are, very obviously and very clearly sharing, then you're going to have protracted discussions. So first of all, he's right that, a couple of months ago, Ghana did, pay the farmers better, cocoa farmers better, but that has changed. And I'm not sure whether he's following up with the news, but he very confidently asserts that Ghana is paying more. When the facts are that, Ghana is paying around 60 Ghana cedis per 64 kilogram bag, that leads you to something in the region of about 10.31 per kilo. If you you convert that to dollars, you get about $1.28. Ivory Coast is doing 825 CFA per kilo. You transfer that to dollar, you get $1.28. So where does he get this information about Ghana paying more than Ivory Coast, which he assessed with such great confidence? I think there has to be a sense in which we are a bit more humble about these data points. And in the same point around how many countries have an active IMF program. You go to the IMF site, they tell you themselves that countries that have an active program with them, it's a certain number. And those that came for the SDR redistribution, it's a certain number. But he insists on conflating the two. And I get a bit confused about what his motives would be when the facts are so apparent and so clear. I think we have to really be critical about how we approach the debate, because we're going into a discussion with the IMF where we need to have some sense of national consensus about what the critical issues are so we can know what of those prescriptions will work for us and what we can accept and the rest of it. But if you're quibbling over clear facts, facts that are there, how are we going to be able to come to that consensus? So I will respectfully ask that Mr. Afenyo Markins, given that he's a very leading member of the party that is in power and also in parliament, be more respectful of the facts and stop assuming that those of us that are sharing our opinion are doing that with any ill motive. We're just trying to contribute to the debate in the best way that we can. Thank you.
Thank you very much, Bright. And so let me come to the two of you, and I end with Afenyo Markins. Yes. So interesting. I know you want to respond to a few things, but Occupy Ghana issued a statement this week, and it's very revealing for many people. Among other things, Occupy Ghana says, within the first, term of Akufo-Addo, as much as 47.9 billion cedis has gone into, if you like, call it corruption. I mean, when you take the Auditor General's report and the monies that need to be recovered, and you have an Auditor General, unlike Daniel Domelevo, who is not issuing disallowances and surcharges. Daniel Domelevo did that and saved us a lot of money, and we're all celebrating that. This Auditor General refuses to do that. Occupy Ghana has issued letters upon letters. He's not budging. He seems to be, I don't know what it is. Now, they are being compelled and they are threatening to sue again, even though Occupy Ghana is the organization that went to court and got the Supreme Court to say that Auditor General used surcharges and disallowance. So, as much as 47.9 billion stands unrecovered, lost to corruption. And we are going to the IMF seeking how much? 16 billion. It doesn't make sense. What do you say to that?
Like you said, just quickly. You see, I don't want this debate to be an NDC MPP affair. And I thought I tried to refrain. I dealt with facts, and facts are sacrosanct. I'll send you this link so that you can put it for everybody to see. It's from the IMF itself, International Monetary Fund. They've given us a list of all the countries, 7 member countries, IMF financing and debt service relief. What Mr. Afenyo is talking about is simply that when COVID struck, the IMF allocated some funds, which they call the Rapid Credit Facility. The IMF uses SDR as their currency. Ghana went for its own on April 13th, 2020. We took 1 billion. In fact, if you look at most of the African countries, most of them, Gabon, Central Africa, Chad, Comoros, all of them took just about 300, 400. In fact, the highest is about 600. Ghana has already gone for that 1 billion and spent it. What we are saying is that post that 1 billion, we are still struggling. So we are going into an IMF program. You see, it's important that we lay the facts bare so that when we go into this IMF program, like Bright and Co are saying, honesty, integrity is the hallmark. Even the 15.7% deficit the IMF reports for 2020, read through our budget. Our minister is reporting 11%. So it sends conflicting information. The issue of 2019, that everything was okay in 2019. If everything was okay, why would your currency depreciate by about 13%? In 2019, if you take our total revenue, in 2019, total revenue, it couldn't pay for debt servicing and wages and salaries. So you cannot sit here and say that everything was okay in 2019. When the facts from your budget, the minister's own statement, clearly shows that, look, we're heading in trouble. By 2019, our debt to GDP had ballooned from 57 to about 64. So clearly, don't tell us that everything was okay. Now, the final issue about taxes. Post-COVID, the minister addressed all of us and said that because of COVID, we must make certain sacrifices to resolve the situation. He introduced a COVID levy to deal with COVID. He introduced a financial sector levy to deal with the issue of Afenyo raised. He introduced energy sector recovery levy to deal with energy sector issues. Introduced sanitation levy, changed the VAT rate, and you call all this minor taxes, and told workers that
before that we had the luxury tax.
Not even I won't even go to post-COVID. And then he told workers that, look, all of a sacrifice, you get only 4% salary increment. 2022, 7% salary increment. Today, inflation is over 30%. And yet, we still cannot manage the economy. We are going to IMF. So I would plead with our colleagues on the other side. This is not an issue of NDC did this, MPP did this. We found ourselves in a very difficult situation. What sacrifices can we make?
Once you understand that difficulty, if the government is coming to Parliament seeking approval for loans, and we understand there's this 1 billion that is outstanding that it wants to come for it, you shouldn't take a stance that says that, you want to scuttle it.
No,
taking the marching orders from President
press.
Mahama, who says unless they give you clear
fantastic
expenditure lines you shouldn't approve.
Because we don't want to find ourselves in this situation where you just go and borrow 3 billion Eurobond and spend it the way you want. When President Kufuor first went for Eurobond, and even under Setekwe, they give you an itemized bill of exactly where we are investing those monies. And this is a critical expenditure. So when President Mahama says, no, pull the brake, take it easy, engage Parliament, let us know exactly where these monies are going. That is a mark of a true leader.
I remember on an occasion when the minority then, which is now the majority in quotes, had to fight you to bring the itemized bill when you were in government.
But we did.
Anyway.
So if we are asking them to bring it, is it not fair? Is it not proper?
Okay. Now, I think the issue I picked from Occupy Ghana, when they say, if you take our Auditor General's report from 2016 to 2020, what we are going to the IMF for is 1%, or what we have lost is 3 times what we are going to the IMF for. It doesn't make sense. How can we improve this situation so we don't find ourselves having to go to the IMF for 1 billion when there's 3 billion that is for 2 billion, when there is 6 billion that is stolen and unrecovered? Stolen and in quotes.
Okay, so Samson, first, let me do a quick rebuttal. My respected friend who brought data from IMF to dispute my submission on the 100+ countries.
Both of them, Dr. Theo Champong and
Dr. Theo Champong and then Sam. Please, with respect, if you had listened to me properly, you would have responded differently. For the avoidance of that, let me restate my position. That since COVID struck, over 100 countries have gone to the IMF for support in one way or the other. Don't forget that the Rapid Credit Relief Program that was introduced by IMF, the Ghana benefited 1 billion, you just stated. Many countries went for it. The 40 countries plus that he showed, as currently showing on his data, are those going for funding. I never referred to 100 countries going for funding. So don't misquote me. I know how to choose my words. All I said was that since COVID struck, we have had over 100 countries who are members of the IMF going to the IMF for support in one way or the other. The support could be in funding or technical support. And you refer to Senegal.
But not the bailout that Ghana is seeking.
Well, you see, Samson, let's understand a language in context. If you go for technical support, is it not a bailout? If you
but before then, I don't want to interrupt.
Samson, if you only want to interpret bailout to mean financial bailout, say so.
I want to resist the temptation of interrupting you. So I'm asking this. Ghana had gone to the IMF to take something.
1 billion.
That one, it wasn't an issue. We didn't say Ghana is going to IMF. That's the point they are making.
Samson, you see, one problem I have with some of our experts is that they don't want to be contested, that they've come with data, so if you rebut, then they get angry. That was the way they were responding. Why? I don't have a right of rebuttal and I cannot reply you? Let's be fair. I am saying, and they should not misunderstand me or say somebody is a politician and is arrogant and all that. No. All I am saying is that since COVID struck, we have had over 100 countries going to the IMF for support in one way or the other. What he showed on the screen, the 40+ countries, are countries that have gone for specific funding, have applied for funding. That is what he's saying. But if we now want to talk about support, technical support in one way or the other, it exceeds the number. And it's a matter of fact. They should also check it.
Are you scared?
Now, he agrees with me on the cocoa farmers, the support government has given for cocoa farmers, but then quickly rebuts by saying that, oh, currently, as it stands, we pay less. That is the point I understood my colleague to be making. But consistently, Ghana has been paying more, the government has been paying more to our cocoa farmers than many other countries. So I don't get the point he was trying to make.
I'm sure our listeners got it. Our viewers got it. So,
right. So let me
avoiding interrupting you. Please
let me deal with that. I mean, I haven't dealt with that point. I come back again. You see, John is a smart communicator. He introduced the partisan argument. Then when he realized that he was in a tight corner, he now says that, let's have a national approach. No. Let me finish. I always kept quiet for you. You must be tolerant.
If you mention John and say he's in a tight corner,
you now say that you are not doing partisan politics. But you were talking about NDC and what you have done. And then you were now trying to compare to MPP and trying to say that, you invested the monies that you borrowed and all that. I agree with you on an important point. The projects uncompleted. I agree that if you invest in projects and they are not completed and they are stuck, you don't get the returns. And on the warehouse thing that you talked about, food security is critical. So I think that is one point that must be taken on board, that some of these critical investment, government takes steps to ensure that they are completed so that the benefits that are intended, the people get it. I mean, because food security is critical. Our farmers, we need to support them. We need to stabilize the agriculture sector. But that is not to say that government has not done anything to support the Ghanaian farmer. You don't need to create that impression. And you don't also need to create that impression that, really, we're just on a borrowing spree. And the economy, it's as it is because government, threw caution to the wind. Obviously, we never anticipated.
You had a Fiscal Responsibility Act, is it?
Listen.
You went overboard the Fiscal Responsibility Act. How many times?
COVID allows that. We have an exception. Wait.
They were reporting the deficits.
Come on.
The figures are down on the IMF website.
If you let me give you figures.
From where? Please let us know where you are putting your figures.
With respect, check it. Your gross international reserves.
No, from where? Which documents?
Please,
you can't just bring anything like that.
Okay. Ministry of Finance. Your gross domestic international reserves.
All right.
2016.
Okay.
6.2.
Thank you very much.
2017. 7.6.
And I need to apologize. I need to apologize that we take a break and we return with less than 30 minutes for the second issue that we have tabled for discussion. We'll be right back.